Hello viewers, in this video I'll be going over natural gas ETF ticker symbol UNG. Today we are relatively flat, only 4 basis points up on the 1-hour chart. We touched several times on overbought level on the 1-hour RSI, and on the 4-hour chart we have not reached the overbought level on the 4-hour RSI. I believe we may have a possibility of touching it and hitting a resistance on the 200 moving average on the 4-hour chart. I'll mark that there, and that price is at 23.35 on the daily chart. That resistance on the 200 moving average in the 4-hour chart does coincide with past support and the 50-day moving average, so I would say this is a good resistance line. But for the other side, if we were to reverse, we may head back down to the support level of where we were at April 23rd, and that price is at 21.57. So if we were to move on higher, that price movement will be about 2.7% move up. However, if we were to move down, that price movement will be around 5.2% move down. On to the next module. I'll compare today's current trend with this trend that dated back to April 24th, 2013 to July 19th, 2013. So I will point out why these two charts are similar. So from the beginning of the trend, what we had here was we started off on top of the middle Bollinger Band, and then we proceeded on down and touching the bottom Bollinger Band right here. And then we made an attempt to reach the middle Bollinger Band, and we'll make this blue. However, we do proceed to continue on down right here, and then we finally broke through the middle Bollinger Band and touched the upper Bollinger Band right here. And onto the chart in question. So what we started off from the beginning was starting above the middle Bollinger Band and then touching the bottom Bollinger Band right here, and then, but in this case, it touched close above the middle Bollinger Band for several days, but it does proceed back down in a downtrend. And then what we have here is touching the bottom Bollinger Band, and then what we have here touching middle Bollinger Band once more, and then we see one more instance touching the bottom Bollinger Band right here as well, and then we finally broke through, reaching the upper Bollinger Band right here. So I may have missed one point, so let me get through. This is supposed to be red, and there is an instance where we touch right here, middle Bollinger Band, retreated, and we'll make this red. So only on the last part where it didn't touch the bottom Bollinger Band is the difference. But we have 1, 2, 3, 4, 5, 6, 7 points. 1, 2, 3, 4, 5, 6, 7 points that are similar or somewhat identical. So there's reason to believe that if the patterns or the trend is similar, the outcome or the forecast would also be similar. So let's head to the forecast model. I'll go day by day where natural gas will head to next coming days. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So again, the trend that I took a look at was April 24th, 2013 to July 19th, 2013. And back then, natural gas fell down around 10%, but it's only a forecast of what happened back then, so take it as a grain of salt. And here's the line graph that I compared it to, overlapping the 2013 model with our current trend. And that is all. If you enjoy this content, feel free to like, subscribe, and thank you for watching.